Bitcoin dropped to below $27,000 as the Federal Open Market Committee raised interest rates by a quarter point, as was widely expected. The FOMC acknowledged the recent banking near meltdown and its effects on economic activity, hiring and inflation. Ether on Ripple's XRP token also fell, with the S&P 500, Dow Jones Industrial Average and Nasdaq closing down 1.6%. The 2-year Treasury bond rate dropped to 3.93%, reflecting near-term interest rate expectations, while the labor market has remained strong. Despite this, investors have started viewing Bitcoin as a store of value. A mini bull run could be in play, though caution is needed given the potential for further rate hikes. This article assesses the market implications of the U.S. Federal Open Market Committee's decision to raise interest rates by a quarter point on Wednesday. The FOMC acknowledged that the recent banking near meltdown is likely to result in tighter credit conditions and weigh on economic activity and inflation. As a result, Bitcoin sank below $27,000 and Ether dropped 3.1%, while traditional markets only declined slightly. The 2-year Treasury bond rate fell to 3.93%. The FOMC's decision came after February Consumer Price Index data showed a drop in month-over-month inflation, and the labor market has remained strong in recent weeks. However, Neil McMillan cautioned that it is too uncertain a time to make definitive calls, and the Federal Reserve may continue hiking rates higher than expected. Tether executive Ardino believes that it is a stablecoin issuer's duty to protect reserves and funds with all its capabilities. He also believes that overexposure in a single jurisdiction can cause issues. He also expressed that if Tether were to remain the only stablecoin in the market, the industry would no longer be an industry. Ardino further stated that the US dollar can still be seen as a store of value in some countries. However, he believes that Bitcoin is still the best for storing wealth. Lastly, he mentioned Tether's collaboration with American clothing brand Guess to accept Bitcoin and Tether payments in Lugano retail stores. This article provides an insight into the thoughts of Tether executive Paolo Ardino on the importance of protecting reserves and overexposure in a single jurisdiction. He believes that a stablecoin issuer's job is to protect reserves and funds with all its capabilities and that overexposure in a single jurisdiction could cause great issues. He also believes that if Tether remains the only stablecoin in the market, the industry would not be an industry. Ardino also discussed other topics such as the dollar being a store of value, Bitcoin payments adoption, and his firm's collaboration with American clothing brand Guess to bring Bitcoin and Tether payments to retail stores in Lugano. Ether's price rose 15% in less than 3 days after briefly trading below $1,400 on March 10. This is likely due to a correlation with tech stocks and its increasing total value locked as well as deflationary token economics. These factors suggest that the path to $2,000 is set in stone. Despite delays in Ethereum's Shanghai hard fork upgrade, regulatory uncertainty, and the real chance of price impact when validators unlock their 32 ETH deposits, it is still set in stone. The market capitalizations of Oracle, Salesforce and SAP are also comparable to Ether's. This indicates that the drop below $1,400 was illogical given their correlation. This article does not contain investment advice or recommendations. This article provides an in-depth analysis of the recent rise in the price of Ether. It examines a variety of factors that have contributed to the price increase, such as its correlation with tech stocks, its increasing total value locked and its deflationary token economics. The article also provides evidence to suggest that Ether is currently undervalued, with its market capitalization being comparable to those of Oracle, Salesforce and SAP, while its price is still discounted relative to Bitcoin. Ultimately, this article suggests that Ether is set to reach $2,000, which is a conclusion supported by the evidence presented. Crypto. Quant analysts have suggested that Bitcoin, BTC, price action could reach up to $30,000 in the near future. They have referenced both the unspent transaction outputage bands and the short-term holder support as indicators of this potential increase. However, they have also cautioned that the $1 million 90-day Bitcoin prediction of Coinbase's former CTO is unlikely. The short-term BTC movement will depend on the outcome of the FOMC meeting. This article provides an insightful look at the current market sentiment of Bitcoin, exploring the opinions of several analysts on the matter. It examines the unspent transaction outputage bands and the short-term holder support to assess the market's potential direction. The article suggests that new buyers within the longer UXO age bands have emerged and that the short-term holder supply is at its highest point since November 2021, which is a sign of a further uptrend instead of a decline. The article also cautions that the $1 million 90-day Bitcoin prediction of Coinbase's former CTO is unachievable and that the FOMC meeting will play a role in the short-term BTC movement. Analysts believe that Ethereum will soon join Bitcoin in its rally. Indicators like increasing number of addresses and open interest are contributing to a potential surge in ETH prices. However, there is also the possibility of high volatility due to a decline in NFT trades and gas usage on the Ethereum network. This analysis of the Ethereum market shows that the King Coin's rally has not been fully realized yet and Ethereum's prices are still to experience a surge. Additionally, the increasing number of addresses on the network and rising open interest values imply that the network could soon see a surge in activity. On the other hand, decreasing NFT trades and falling gas usage suggest that user interest in Ethereum-based NFTs is declining. Thus, it is important to be aware of these changing market dynamics before making any investments. Ripple executive Brad Schwartz criticized the SEC's recent enforcement action against Coinbase. He suggested that it may be motivated by incompetence or a desire to protect insiders and early investors. He also questioned the SEC's application of the Howey test. He noted that it is not as simple as some people believe, since the agency struggles to determine whether or not Ethereum is an unregistered security. Coinbase commented on the SEC's actions, saying that it had asked for reasonable crypto rules for Americans and had instead received legal threats. The comments made by Ripple executive Schwartz suggest that the SEC's recent enforcement action against Coinbase may be motivated by incompetence, a desire to protect insiders and early investors, or both. He also expressed frustration with the SEC's application of the Howey test to determine whether or not Ethereum is an unregistered security. These comments echo those made by Meta's former blockchain lead David Marcus, who noted that even the top securities lawyers at major law firms don't know how it applies to many tokens. Coinbase made a blog post commenting on the SEC's actions, saying that it had asked for reasonable crypto rules and had instead received legal threats. The company also noted that when they filed to go public in 2021, the SEC approved the filing, knowing the details, but has now changed its mind on what is allowed. Ripple's legal battle with the SEC is expected to come to an end in the first half of 2023.